The financial spotlight is on Ripple's XRP, as traders closely monitor a critical trendline that could propel the cryptocurrency's price toward a $9 target. This potential breakout follows increased legal clarity for Ripple after a partial courtroom victory, which has alleviated some uncertainties surrounding the token. The positive sentiment is bolstered by Ripple's ongoing efforts in the cross-border payment sector, where banks and fintech firms continue to explore its technology for efficient money transfers. However, the $9 price prediction hinges on the trendline's stability. A breach could quickly alter market dynamics and investor confidence. In parallel, LayerBret, an emerging Ethereum Layer 2 solution, is capturing attention with its promise of high returns and robust infrastructure, offering rapid transactions, low fees, and staking rewards exceeding 600% APY. LayerBret is generating significant buzz, especially given its pre-sale price of under a cent. This positions it as a high-risk, high-reward investment compared to XRP's more gradual growth trajectory. While LayerBret's combination of meme culture and functional technology provides a compelling narrative, its volatility and nascent stage present considerable risks. Investors are weighing these factors as they decide between the steady potential of XRP and the explosive promise of LayerBret.
Brinker International Inc., NYSE EAT, the operator of Chili's Grill and Bar and Maggiano's Little Italy, saw a notable shift in its shareholder base as Sage Rhino Capital LLC reduced its stake by 15.9% during the second quarter of 2025. This move comes amid a series of insider sales, including CEO Kevin Hochman and COO Douglas N. Cummings, who sold significant portions of their holdings. Despite these sales, Brinker International's stock has shown resilience, with its recent quarterly earnings report surpassing expectations. The company posted an earnings per share (EPS) of $2.49, slightly above the consensus estimate, with a year-over-year revenue increase of 21% to $1.46 billion. Market analysts remain cautiously optimistic about Brinker International. The company has received mixed ratings from various equity research analysts, with a consensus rating of hold and an average price target of $173.18. Notably, Evercore ISI upgraded the stock to outperform, raising their price target to $210, signaling confidence in the company's growth prospects. This upgrade aligns with Brinker International's ambitious FY 2026 guidance, projecting an EPS range of $9.90 to $10.50. As the company navigates the evolving restaurant industry landscape, its strategic decisions, such as insider sales and analyst ratings, will be closely watched by investors seeking to gauge the company's future performance and market positioning.
KG&L Capital Management LLC has slightly reduced its holdings in the VanEck Semiconductor ETF, NASDAQ, SMH, trimming its position by 3.1% during the second quarter. As per its recent SEC filing, this adjustment saw the firm selling 96 shares, bringing its total to 3,006 shares valued at $838,000. The VanEck Semiconductor ETF, which tracks the MVIS US-listed Semiconductor 25 Index, represents a significant benchmark for investors in the semiconductor sector, offering exposure to 25 of the largest US-listed semiconductor companies. Despite KG&L's reduction, other institutional investors have shown increased interest in SMH. Notably, Diversified Enterprises LLC expanded its stake by 5.5%, now holding shares worth over $53 million. The ETF itself has performed robustly, with its stock price increasing by 0.2% to $321.82, nearing its 52-week high of $325.36. This reflects broader investor optimism in the semiconductor industry, driven by technological advancements and increasing demand for semiconductor components across various sectors. The ETF's strong performance, underscored by a P/E ratio of 34.83 and a beta of 1.35, indicates a high growth potential, but also suggests a higher volatility relative to the market.
Diversified Enterprises LLC has reduced its stake in Banco Santander, S.A., NYSE, SAN, by 19.6% during the second quarter, now holding 12,057 shares valued at $100,000. This move comes amid a broader trend of institutional adjustments in Banco Santander's stock, with significant activity from other major investors. Notably, Chevy Chase Trust Holdings LLC increased its holdings by 30.5% in the first quarter, while Citigroup Inc. expanded its position by 170.6%. These shifts in institutional positions reflect varying outlooks on Banco Santander's performance and future prospects. Banco Santander's stock opened at $10.38, close to its 52-week high of $10.40, indicating a robust market valuation with a market cap of $154.51 billion. Despite reporting a quarterly earnings per share (EPS) of 22 cents, missing analyst expectations of 26 cents, the bank maintains a strong return on equity of 11.98% and a net margin of 17.30%. Analysts have mixed views, with Citigroup rating it a buy and Goldman Sachs upgrading it to a strong buy, while Kepler Capital Markets downgraded it to a hold. The consensus remains optimistic with a buy rating, suggesting confidence in Banco Santander's strategic direction and market position.
Alphabet Inc., Nasdaq. Google recently saw a slight reduction in its stock holdings by Wealth Effects LLC, which decreased its position by 1.9% during the second quarter, according to the latest SEC 13F filing. Despite this reduction, Alphabet remains a significant part of Wealth Effects LLC's portfolio, accounting for 1.9% of its total holdings. This move comes amidst a backdrop of increased interest from other institutional investors, such as Mather Group LLC and Foster Victor Wealth Advisors LLC, who have boosted their positions in Alphabet by 2.6% and 8.3% respectively. Alphabet's stock has been performing well, with a recent opening price of $246.54 and a market capitalization nearing $3 trillion. Analysts remain bullish on Alphabet, with numerous brokerages, including Deutsche Bank and J.P. Morgan Chase, maintaining buy and overweight ratings while increasing their target prices. The company's robust financial performance, highlighted by its recent earnings report, which exceeded expectations with an EPS of $2.31 against a forecast of $2.15, underscores its strong market position. Alphabet's strategic initiatives across its Google services, Google Cloud, and other bet segments continue to drive growth, with a notable return on equity of 34.31%, and a net margin of 31.12%. The company's recent introduction of a dividend also signals confidence in its ongoing financial health, offering investors an annualized yield of 0.3%. The market sentiment around Alphabet remains positive, supported by its diverse product offerings and continued innovation in technology and services. The company's strategic moves, such as insider sales and institutional adjustments, reflect a dynamic investment landscape. Yet the consensus among analysts suggests continued confidence in Alphabet's long-term growth prospects. As Alphabet continues to expand its global footprint, its performance will likely remain a focal point for investors looking for stability and growth in the tech sector.
Autodesk Inc., Nasdaq. Ads, a prominent provider of 3D design and engineering software, is experiencing significant investment activity from institutional investors. Diversified Enterprises LLC has acquired 758 shares valued at approximately $235,000, reflecting a broader trend among major institutional investors, such as Vanguard Group Inc., 91 UK Limited, and T. Rowe Price Investment Management Inc., who have increased their stakes in the company. Currently, institutional entities own 90.24% of Autodesk stock, demonstrating strong confidence in its performance and future prospects. Autodesk stock, which recently opened at $322.88, is performing well, with its 50-day and 200-day moving averages at $305.46 and $290.74 respectively. The stock is trading near its 52-week high of $329.09, indicating positive market sentiment. Analysts from firms like Citigroup, Piper Sandler, Barclays, Wells Fargo, Macquarie, and Oppenheimer have raised their price targets, assigning ratings from overweight to outperform. The stock holds a consensus rating of moderate buy and a target price of approximately $356.83, suggesting potential for further growth. Autodesk's market capitalization stands at $68.77 billion, with a favorable debt-to-equity ratio of 0.91 and a P/E ratio of 66.85. Despite insider trading activity, including sales by Director Ayanna Howard and EVP Stephen M. Bloom, insiders own only 0.15% of the company. This insider activity, alongside analyst upgrades, creates a dynamic environment for Autodesk stock. The company's diverse product offerings, such as AutoCAD and Fusion 360, serve multiple industries, including civil engineering, architecture, and media, supporting its strong position in the tech sector. Overall, the combination of robust institutional investment and optimistic analyst sentiment suggests a stable and promising trajectory for Autodesk in the near term.
Diversified Enterprises LLC's recent investment of $248,000 in Robinhood Markets, Inc., NASDAQ Hood, underscores a growing institutional interest in the financial services platform. Known for democratizing stock trading through its app, this move is part of a broader trend, with several hedge funds, including Universal Beteiligings und Servicegesellschaft MBH and Siemens Fonds Invest GmbH, also acquiring stakes in Robinhood recently. The company's stock has experienced significant insider trading activity, with Director Baiju Bhatt and insider Stephen M. Quirk selling substantial shares, indicating potential profit-taking or portfolio rebalancing. Robinhood Markets has been on an upward trajectory, with its stock price opening at $121.78 recently. Supported by positive quarterly earnings that exceeded analysts' expectations, the company reported a 45% increase in revenue year-over-year for the latest quarter, driven by its diverse offerings, including fractional trading and cryptocurrency investments. Analysts are optimistic about Robinhood's growth prospects, with several raising their price targets, reflecting confidence in its continued market performance. The stock's current market cap stands at $108.22 billion, and it holds a moderate buy average rating from analysts, suggesting a favorable outlook amidst a competitive financial services landscape.
Sage Rhino Capital LLC has slightly reduced its holdings in UBS Group AG by 2.1% during the second quarter, selling 328 shares and bringing its total ownership to 15,093 shares, valued at $510,000. This move is part of a broader trend among institutional investors adjusting their positions in UBS Group. Notably, Goldman Sachs Group Inc. significantly increased its stake by 88.5% earlier this year, while other firms like Nuveen LLC and Deutsche Bank AG have also made substantial investments in the Swiss bank, reflecting varied strategic interests in the company. UBS Group AG, with a market capitalization of $130.76 billion, has been experiencing notable stock performance, trading at $40.78 per share. The bank's recent quarterly earnings report exceeded analyst expectations with an EPS of 72 cents against a forecast of 70 cents and revenue of $11.55 billion compared to an expected $9.77 billion. Despite these positive results, analyst ratings on UBS are mixed, with a consensus rating of moderate buy. The bank's diverse operations across wealth management, banking, and investment services continue to attract investor interest, though opinions vary on its future performance, as seen in the range of analyst ratings from strong buy to sell.
Procter & Gamble, P&G, recently experienced a 14.9% reduction in stock holdings by Chatham Capital Group Inc., which sold 5,800 shares during the second quarter of 2025, leaving it with 33,031 shares valued at approximately $5.26 million. This divestment is part of a broader trend among institutional investors adjusting their positions, with firms like Benjamin Edwards Inc. significantly increasing their stakes, while others such as Brighton Jones LLC and Two Sigma Investments LP also raised their holdings. Despite these mixed movements, institutional investors and hedge funds still hold 65.77% of P&G's stock, reflecting sustained confidence in the company's long-term prospects. P&G reported strong financial performance, with a quarterly earnings per share, EPS of $1.48, exceeding the consensus estimate of $1.42. The company's revenue rose by 1.7% year-over-year to $20.89 billion, demonstrating steady growth across its diverse product segments. Analysts maintain a moderate buy consensus rating, with a target price of $173.68, while the stock currently trades at $152.44. P&G's robust financial health is further highlighted by a net margin of 18.95% and a return on equity of 32.69%. The company offers a dividend yield of 2.8%, appealing to income-focused investors, with a quarterly dividend of $1.0568. Looking ahead, P&G's guidance for fiscal year 2026 suggests an EPS range of $6.83 to $7.09, indicating stable future growth. The company is also undergoing strategic realignment, focusing on its core segments: beauty, grooming, healthcare, fabric and home care, and baby, feminine, and family care. Notable insider trading activities include stock sales by key executives, such as COO Shailesh Jejurikar and insider Mark S. Pritchard. As part of this strategic shift, P&G's diversified portfolio and focus on consumer packaged goods position it well to navigate ongoing market dynamics and maintain its competitive edge.
Seabridge Investment Advisors LLC has significantly increased its stake in Novo Nordisk A/S, NYSE, NVO, boosting its holdings by 20.4% during the second quarter. According to its latest 13F filing with the SEC, this move reflects a broader trend among institutional investors, with various hedge funds either acquiring or expanding their positions in the Danish pharmaceutical giant. Novo Nordisk, known for its focus on diabetes and obesity care, reported a strong quarterly performance with earnings per share of 97 cents, surpassing analysts' expectations. The company also announced a semi-annual dividend, though it has recently cut the dividend yield to 240.0%, indicating a strategic reinvestment focus. Despite these positive earnings, the stock has faced volatility, with its price opening at $55.61, significantly below its 52-week high of $121.34. The market sentiment appears mixed, as evidenced by the varied analyst ratings, ranging from strong buy to strong sell. While some analysts have downgraded their price targets, others remain optimistic about Novo Nordisk's long-term growth prospects, particularly in its core diabetes and obesity segments. The company's robust return on equity of 78.64% and a net margin of 35.60% signal strong operational efficiency, which could bode well for future performance amidst fluctuating market conditions.